What if one piece of legislation could completely change the future of digital assets in America? And what if the investors who are paying attention right now are positioning themselves before the rest of the market fully understands what's coming? Because according to recent comments from Senator Bill Hagerty, the Clarity Act may be much closer than many people think. And later in this video, we'll talk about why some investors believe this could unlock a wave of institutional adoption, why tokenization continues gaining momentum worldwide, and why preparing for opportunity may become just as important as finding it. Now, here's why this matters. Just a few days ago, markets were reacting positively to expectations surrounding geopolitical developments and potential stability in the Middle East. Fast forward to today, and the mood is completely changed. Uncertainty is back. Volatility is back. And once again, we're seeing how quickly sentiment can shift across financial markets. The reality is that whenever traditional markets get nervous, the digital asset market often feels that pressure even more. And that's exactly what we've been watching over the last several days. But while short-term volatility continues grabbing headlines, some much bigger developments are happening in the background. One of those developments involves the Clarity Act. Recently, Senator Bill Hagerty discussed the progress being made around digital asset legislation and suggested that movement on the Clarity Act could happen relatively soon after the July recess period. For many investors, that's an important signal, because for years, one of the biggest obstacles facing digital assets in the United States has been regulatory uncertainty. Companies have been building, institutions have been preparing, developers have been innovating, but many major players have remained cautious because they wanted clearer rules before committing significant capital. According to Hagerty, the goal is to provide the certainty needed for digital assets to operate within a clearer framework while helping America remain competitive in the global financial system. And that's exactly why so many investors continue watching this legislation so closely, because the conversation isn't just about regulation anymore. It's about what comes after regulation. But here's where it gets interesting. During the discussion, Hagerty also talked about stablecoins and the role they could play in the future financial system. His argument was that stablecoins backed by short-term U.S. Treasury securities could help strengthen the digital dollar's position while creating additional demand for government debt. Now, whether you agree with that strategy or not, one thing is becoming increasingly clear. Digital assets are no longer being discussed as a temporary experiment. They're being discussed as part of future financial infrastructure. And that's a major difference. Because once governments, regulators, banks, and financial institutions begin discussing digital assets as infrastructure rather than speculation, the conversation changes completely. That's why many investors believe the Clarity Act isn't simply another regulatory bill. They believe it's part of a much larger transition already taking place. And when you look around the world, there are signs of that transition everywhere. Tokenization continues expanding. Financial institutions continue exploring blockchain-based solutions. And organizations across the global financial system continue discussing digital asset integration. Many XRP supporters point to these developments as evidence that utility-focused networks could play a much larger role in the years ahead. Not because of hype, but because financial institutions continue preparing for a more digital financial system. And this next detail could be even bigger. Many believe that once regulatory clarity arrives, institutional participation could accelerate significantly. Think about it. Large asset managers, major banks, investment firms, pension funds, all of these organizations operate under strict compliance requirements. For many of them, clarity is not optional, it's necessary. And that's why some investors believe the biggest impact of regulation won't be what happens on the day legislation passes. The biggest impact may be what happens afterward, when institutions finally have the confidence to move forward. Now, does that guarantee higher prices? Of course not. But many investors believe it creates an environment where adoption can happen much faster than it could before. And that's exactly why so many people continue paying attention to the broader tokenization story. Real estate, debt markets, financial securities, traditional assets moving on to blockchain infrastructure. These are conversations that continue gaining momentum throughout the industry. And many believe that if tokenization expands the way some experts expect, networks supporting those activities could benefit significantly. But that's not the only thing investors should be thinking about. Because if major opportunities do arrive, preparation becomes critical. Many people spend years focusing on accumulation. Far fewer spend time planning what happens when markets move rapidly. Crypto veterans have seen this before. When volume explodes, exchanges often experience delays, outages, or technical issues. Not because they're necessarily doing anything wrong, but because demand overwhelms infrastructure. And when markets move quickly, every second matters. Imagine spending years building a position. Imagine finally seeing the opportunity you've been waiting for, and then being unable to access the platform when you need it most. That's why many experienced investors constantly emphasize planning ahead, having multiple options, having a strategy, and understanding exactly how you'll navigate major market moves before they happen. Because when opportunities arrive in crypto, they often arrive much faster than people expect. And that's the bigger message here. Whether it's regulatory clarity, institutional adoption, tokenization, or broader digital asset growth, the investors who benefit most are often the ones who prepare before everyone else starts paying attention. The next several months could be extremely important for the digital asset industry. And while nobody knows exactly how events will unfold, many investors believe the foundation for the next phase of growth is already being built. The question is whether the market is paying attention yet. But here's the part that many investors are not thinking about right now. Everyone talks about buying. Everyone talks about holding. Everyone talks about price targets. But very few people spend time thinking about what happens after those targets are reached. And that could end up being one of the biggest mistakes investors make. Because if regulatory clarity arrives, if institutional adoption accelerates, and if tokenization continues expanding the way many expect, the market could look very different over the next few years. Now, does that mean prices only move in one direction? Absolutely not. History has shown that every market moves in cycles. Every bull market eventually experiences corrections. Every major rally creates new opportunities, but it also creates new risks. And that's why strategy matters so much. Many investors believe that once XRP reaches certain price levels, they'll simply know exactly what to do. But experience shows that's rarely how it works. When markets move fast, emotions move even faster. Excitement takes over, FOMO takes over, and sometimes people abandon their original plans completely. That's why so many experienced investors continue emphasizing preparation before the big moves happen. Because when volatility arrives, clear thinking becomes much harder. And this is exactly why confidence should never come from someone else's opinion. It shouldn't come from a YouTube creator, it shouldn't come from social media, and it shouldn't come from headlines. Real confidence comes from understanding why you're invested in the first place. The investors who usually survive market cycles are the ones who have taken the time to do their own research, understand the fundamentals, and build conviction based on information rather than emotion. That's what allows them to stay calm when everyone else is panicking. And that's what allows them to stay disciplined when everyone else is chasing hype. Now, another point worth thinking about is infrastructure. Because if the digital asset industry continues growing, the demand for reliable access to markets becomes even more important. Many longtime crypto investors have seen periods where exchanges experience delays, login issues, and technical problems during high-volume events. Again, that doesn't necessarily mean anything improper is happening. Sometimes demand simply overwhelms systems. But the lesson remains the same. Preparation matters. The investors who think ahead usually have more options when opportunities appear. And when opportunities arrive in crypto, they often arrive much faster than expected. One day, nothing seems to be happening. The next day, the entire market is talking about digital assets again. That's happened before, and many investors believe it could happen again. Which brings us back to the bigger picture. Whether it's the Clarity Act, stablecoin adoption, tokenization, institutional participation, or broader blockchain integration, all of these developments point toward one thing. The digital asset industry continues evolving. The infrastructure continues expanding, and the conversation continues moving from speculation toward real-world implementation. Nobody knows exactly how fast that transformation will happen, but many investors believe the direction is becoming increasingly clear. And if they're right, the next chapter for digital assets may look very different from anything we've seen before. That's why so many people continue paying close attention to every development happening right now, because the biggest changes often happen long before the majority of the market realizes what's taking place. And for XRP supporters, that's exactly why the coming months remain so important to watch. If you enjoyed today's update, make sure to subscribe, turn on notifications, and stay connected with XRP Update for more XRP and crypto news. Because what happens next may be much bigger than most investors realize.